Good morning, dear students. Today we are going to start with the finance topic. So in this lecture I am going to give you introduction about the finance. This topic is useful for class 11th and class 12th both. So listen it very carefully. For all the queries you can ask me in your online lecture. So first of all, I will tell you the meaning of business finance. Dear students, every business enterprise, whether big or small, needs finance to carry on its operations. The importance of finance has increased these days because of mass production and use of capital in capital intensive techniques. So for carry out all the activities of the business, we need money. So finance therefore is called the lifeblood of any business. So the requirement of funds by business to carry out its various activities is called business finance. Now the business finance is not only required as an initial capital by the entrepreneur. The need for fund arises from the stage when an entrepreneur makes a decision to start a business. Some funds are needed immediately, say for the purchase of plant, machinery, furniture and other fixed assets. Similarly, some funds are required for day-to-day operations, such say to purchase raw material, pay salaries to the employees. Also when the business expands, it needs funds. So it is not that when I am starting the business then I need funds. I need funds time to time. Okay, so we need funds at the starting also and during the business also. Basically, the financial needs of business can be categorized in two terms. Number one is fixed capital requirement, number two is working capital requirement. Again, I am repeating, you know the meaning of finance now. Now, finance is like blood of the business. Every business needs finance. Now, the business needs finance for two main reasons. Number one is fixed capital, number two is working capital. Fixed capital means the capital which we are giving to the business to start it. For example, I want to open a business, I need some money to start it. For example, I want to purchase any land, building, equipments, tools to start my business. So that will be known as fixed capital. Fixed capital is a capital which is also known as the bound capital. Means this capital we cannot withdraw it very easily. We cannot take the money from the fixed capital, because when we are taking the money from the fixed capital, it means we are shutting our business. So the funds required in fixed assets remain invested in the business for a long period of time. Number two is working capital requirements. So I have started my business. All the money, initial money I have given as a fixed capital to my business. But now I have to pay salaries to my employees. I have to pay taxes. I have to pay rent. I have to pay telephone bill. All this money is also required to run the business. So we call it as working capital requirements. So the financial requirement of an enterprise do not end with the procurement of fixed assets. No matter how small or large a business is, it needs funds for its day-to-day operations. Day-to-day operations means all the expenses, salary, wages, taxes, rent, etc. So we need money for the business for two main reasons. Number one is to start the business. We call it as fixed capital. And number two is to run the business. We call it as working capital requirements. So now we know the meaning of business finance, and number two is why we need finance. Now we need finance for fixed capital and for the working capital. Now the point is from where the finance will come, from where the funds will come to the business. So there are different sources of finance which we are going to discuss in detail in this chapter. So there are different ways how we can generate funds from the outsiders and how we can generate funds from ourselves also. So these are the classification on the basis of period, on the basis of ownership and on the basis of sources of generation. Mainly we should know on the basis of ownership, but I will tell you about other things also, like on the basis of period. For example, I may need funds for long term, short term and medium term. So we call it as on the basis of period. Maybe I need funds only for 1 or 2 months, then it will come under short term. Maybe I need funds for the long term, so that may be for 5 years, 6 years, then it will come under long term sources of finance. Then maybe on the basis of sources of generation. For example, I want to generate internally, means I don't want to borrow from others, है ना, or I want to borrow from others, that is external sources, है ना. So mainly we are going to discuss about on the basis of ownership. So on the basis of ownership we have two choices, means for example if we want to raise the funds from the market, we have two choices, that is owner's fund and borrowed fund. Owner's fund means my money, my own money, which I want to invest in the market, which I want to invest in the business. Borrowed fund means I have borrowed from someone. Means for example, if you need money for the business, you have two choices, either you will invest or you will borrow from other and then you will invest. Okay, so owner's fund means my own fund which I am giving to the business. Borrowed fund means I am borrowing from some other party. So let's discuss it in detail. To understand it more clearly, we will do in detail what is owner's capital and borrowed capital, and you can understand the difference between the both. First of all, meaning. Now owner's capital consists of the amount contributed by the owner. For example, I have a business and I have saved some amount of profit and I have reinvested in the new business, or I have invested in the expansion of the business. Okay, so that is owner's capital, my own fund I have invested in my business. Borrowed capital means I have taken loan or credit from someone, whether it is a bank or a financial institute. So I have taken loan from someone. Owner's capital is permanent, means for example my money I have given to the business, it is permanently invested in my business. But borrowed capital is not permanent, you have to return it to the person from whom you have taken. For example, I have taken loan from the bank, I have to return it to the bank. Bank cannot give me permanently that money. Number 3 is risk. It carries risk of business. Means this point you will understand when you will do the difference between shares and debentures. I will come back to this point afterwards. But borrowed capital, the debts of company are secured. There is no risk that you have to pay more on that. There is a fixed interest which you have to pay. I will come back to this point when we will be doing the difference between shares and debentures. Then control. Owner's capital, all the control will remain with the owner. But in borrowed capital, if you have taken loan from someone, there is no control of that person in your business. For example, you have given the money in the business, then control is in your hand. But if you have taken loan from someone, then that person's control will not come to the business. Security, it does not require any asset or security. कोई guarantee नहीं चाहिए when you are your money you are giving to the business. There is no guarantee which is required. But when you are taking loan, the person will ask for the security, some mortgage, some guarantee the person will ask. Owner's capital, if you are investing in the business, in return you are getting dividend. Dividend is the income which you will get. Here, when you have taken loan from someone, that person will get interest. You have to pay interest to that person. Priority, reward is paid after the payment of interest. Means for example, I have invested myself also and I have taken loan also from the bank. First of all, interest on loan will be paid, then whatever amount will be left, that will be paid as dividend. Means the priority will be given to the interest, not to the dividend. Nature of return, the rate of dividend may fluctuate. It is not fixed. Whatever profit you are getting at the end, that will be divided to the shareholders. But in case of borrowed funds, you have to pay fixed interest to the person from where you have taken the loan or credit. I hope you have understood this topic. Okay, other topics we will be doing in the next lecture.